Thanks a lot for being here, Byron. Appreciate your time.
My pleasure. Great to be with you today, especially.
Yeah, thank you and congrats. Firstly, on the numbers, you guys came away with what, like 12% after the IPO, is that right?
That's without the options fully included, but at about 9 million shares, yes.
Okay, so tell us about the background and how big of a deal this one is, because it seems like somewhat of a seminal event. There's a lot of expectations for capital markets going into next year. The president literally rang the bell at the NYSE today, so the environment, the vibe is obviously there.
It's a special sign for the company, and also I think a positive sign for the market that more broadly things are open and people are back on offense. And for ServiceTitan today, and for everyone in the trades that this represents, we're calling it the National Day of the Trades to help celebrate the plumbers and electricians and HVAC folks out there who serve, our economy and our United States. And this is a day to help celebrate them as well.
Yeah, tell me about the business, because what's interesting is when I was reading about ServiceTitan and especially some of those trades that they make software for, I was thinking about a company that we've talked with a few times, their leadership, another business called Procore, and in my research I found out that was also a company that you guys helped bring to market. So what is this particular vertical that interests you guys?
Yeah, so at Bessemer, we've been fortunate to work with a number of the leading vertical SaaS companies, including Shopify for e-commerce, Toast for the restaurant industry, and Procore for construction, as you note. ServiceTitan is very much following that same mold with a massive TAM and addressable market overall. They serve these wonderful industries with human touch, where you have agents being deployed into the field that are helping repair and install and enhance all of these, tangible items in your home and in a corporate environment. And what they do is help those companies power their business. They are the heart and lung machine, the platform for them to run all the different functions of their business. It is the essential software and the essential platform for the trades. And today, the world's seeing the power of that business model revealed.
Okay. What do you see as the takeaway in terms of what it requires to go public in this market right now, the timing of it and the maturity of the company who you've been involved with for a while now? Why was now kind of the appropriate time?
Yeah, so ServiceTitan's a scaled business, over an $800 million run rate. They're free cash flow positive, over a decade in the making. And so, I think that's certainly one of the signs that the market's looking for is scale, stability, as well as predictability overall, which they have. And so what the world's going to be looking for going into 2025 is for more of these leading companies, these iconic companies in their segments and in these verticals, to raise their hand and say, we're ready to go too. And we think that the positive receptivity of the market today, the demands for the buy side, and the interest from the buy side will signal that the markets are open. And I suspect many will start to follow going into especially the second quarter of next year.
What do you see as the financial characteristics that reach the bar and meet the current qualifications to go public? What does a company need to display? Why was it now for the financials at ServiceTitan?
People are still especially interested in the growth story, and in most cases are willing to look at the revenue profile for many years ahead where you have growth, but there's still an efficiency bar that people want to see. And I think that's going to be the interplay as we get back more on offense and people turn more from fear to greed. They're going to be willing to give a little bit. They don't necessarily need to be generating meaningful free cash flow or wildly profitable, but they're going to want to see a path to that. And in exchange, they're going to want to see the growth profile that's still pretty compelling over a multi-year horizon.
Okay, and we're talking double digits growth here.
Absolutely. The hypergrowth bar of several years ago of 30% plus really isn't there today. If you look across our BVP NASDAQ Emerging Cloud Index, there's not a single company in that basket that's growing with a forecasted model above 30% today. But companies in the 20s are now hyper growth, and where they can do that efficiently in what has been a pretty tough economy over the next few years are really the companies that are going to lead us out of this next period and be back leaning forward into the 2025 economy.
Okay. Byron, in terms of profit trajectory, what does that priority look like? If you were looking at, because we talk with the NASDAQ team a lot, and they've got an IPO pulse, and it looks like there should be more companies going public, basically, according to the data. The backdrop for the market suggests we should be having more out of this pipeline that's getting pretty jammed. So if you think in that context, what do these companies need to achieve to kind of get that clearance and get that pipeline moving, you think?
The pipeline has never been bigger and the backlog has never been deeper than this point in time. We have, though, a calendar issue here that's coming into play. We're going into fiscal and calendar year closes. We're going into holiday seasonality. We're going into full year audits. A lot of factors that are going to conspire to contribute to what I think will still be a pretty light Q1. If the market holds and these factors remain at the macro level, though, I think that will turn and we'll see a lot of confidential filings in Q1 that flip to public filings in late Q1 and early Q2. And you'll see a backlog of really interesting companies start to come to market in Q2 and beyond, which could set the stage for a pretty interesting year next year in 2025.
Is there some signal in that ServiceTitan still is not a profitable company on the latest reading, right? It lost about $100 million net loss, even though there's that top line growth. Is there a message there about the market's willingness to trade into these secular themes, even if profit has not been demonstrated on a long term yet?
As you and your team know, with these SaaS subscription businesses, a lot of the GAAP metrics are lagging indicators. And so the company was very forthcoming in a lot of metrics that they shared in their IPO roadshow, including non-GAAP profitability and free cash flow positivity. I think both of those factors were compelling to the buy side.
Okay, understood. Byron, thanks a lot for your time.